So, what if I told you that there was a way to grab a hold of 50,000 US dollars, even if you've got no tax returns, no traditional job, shall we say, you've got no real paperwork that most of the banks out there look for? There is a way, and I'm basically going to show you how. Now, it's called no doc. It's a thing that's traveling around the internet at the moment. But what I'm going to do is I'm going to break down exactly how you can grab a hold of it in order to invest it into your business. And the thing about it, you don't need all of the traditional documents and history that most banks are looking for. Let's get it. So what exactly is a no-doc loan? A no-doc loan, in essence, in the United States of America, is basically a business loan for people who don't have traditional documentation. So we're talking about things like tax returns, they haven't got any. We're talking about things like audited statements. We're talking about things like P&Ls, etc., etc. Heavy paperwork that normally you would need in order to get something like a term loan. So a term loan is for a business or a business person in the United States of America who has that little bit more of experience, shall we say. They're a little bit more seasoned in the game. They've had their business for around about 2 years. They've got history, they've got revenue coming in. So no-doc, or the no-doc loan process or product, shall we say, is basically designed for an individual who's maybe new or doesn't have that documentation. Maybe they've had a side hustle for years and now they're wanting to get legitimate because they realize in order to up their game, they need funding. So what exactly do you need? You need credit, plus you need a credit profile, plus you need that money, moolah, bling, and ka-ching. You need that cash flow. So one thing I want you guys to know is no documentation doesn't necessarily mean no, or it does not mean, let me be definitive about this, it does not mean no requirements. So you're going to need stuff. You're going to need a credit score. You're going to need a credit profile. Now, you're looking at around about a 680 credit score to get in from the ground up. Now, there are programs within the no-doc sphere, shall we say, where banks will consider something lower than a 680, but generally you're going to be looking at a 680 or higher. Now, take into consideration, if a bank that you find that does no doc takes you into consideration because of the fact that you've got a lower than a 680, do expect and do be prepared for the fact that you're going to pay a much higher interest rate. Other things you need to take into consideration, you need to take into consideration your credit profile. So what does that mean in essence? Basically, you need no late payments, You need high, or rather low, credit utilization. Now, what do I mean by low credit utilization? Anything below 30% is good, 10% is ideal, but it's not really realistic for the average person. You need minimal inquiries, let's say 3 inquiries over the last 6 months. So inquiries, basically, there's a company out there, you sought credit out from them, they've made a direct hard inquiry or requested to retrieve your credit report. That in essence is a hard inquiry for all you guys out there that don't know. Now you know. So even though the fact that you're not expected to submit tax returns, you're not expected to submit profit and loss sheets and all the other paperwork that comes with, let's say, a term loan, for a more seasoned veteran, they are going to ask you for bank statements for at least 3 to 6 months. So it says no doc, and you're probably saying to yourself, well, Ben, I thought this was no doc, but within reason. They're not asking you for as much documentation as what they would normally. They want to see deposits. They want to see activity on that account. They want to see what kind of cash that you're dealing with. They want to see your business set up. So they want to know the fact that you're set up properly. You've got your EIN number. You've got your business checking account. You've got a business name. You're registered with the IRS, etc., etc. All of the formalities that mean you are an entity or a business. They are not looking for sole proprietorship, because sole proprietorships technically do not separate you from your business. So an LLC, a C Corp, an S Corp, any one of those entities, you are a separate entity. This is the person, this is the business, the entity. In order to grab a hold of or gain a hold of a no-doc loan, they're looking for you to be official. Now, even if you're a company that's brand new, they want you to show them that you've been active, or they want to know how long you've been active for, taking into consideration payments, spending. They want to see that you've basically built up momentum. Now, don't worry and don't panic if you're a new business, because no-doc loans essentially are designed for new business owners, okay? The mere fact that you've proven or you've got a 680 credit score or above, okay, that proves that you have managed your money on the personal side. So because the fact that they're asking for bank statements, because the fact that they're looking for activity, don't worry about that too much if you're brand new, because you've already proven at the 680 plus level that you're good to go. So if you've built those 5 pillars that I've just spoken about, basically you're good to go. What you must say and how you approach the bank. So this is where a lot of people basically ruin their chances of grabbing a hold of 50k, okay, when it comes to no-doc loans. They walk into a bank or they call a bank and they say to them, can I grab a hold of a no-doc loan? Or do you do no-doc business loans? Completely incorrect. The bank is basically going to smile at you, and that's going to basically trigger in their mind that you're looking for no documentation. What's up here? And they'll basically put you in the category of a documentation loan, and you'll walk out not getting the loan simply because of the fact that you said the wrong thing. This is how you do it. So here's a source. This is what you're going to say. You're basically going to ask them or say to them, what's your lending limit? Before you ask for full documentation, or before full documentation is required. Or you can say something like, okay, I'm looking for a business loan of around about $50,000, and I just want to know what type of documents I would need at that level. Simple. That's it. So basically, conversations that flow exactly like that basically tells lenders that you're comfortable. So many bankers and lenders in the United States of America, they basically have products, okay, that act under a certain limit. No-doc obviously being one of them, okay. And it basically, in essence, you're not going to need full tax returns. You're not going to need profit and loss statements, pay stubs, etc., etc. Now, another tip: never, ever, ever lead with what you don't have. Don't walk into the bank or waltz into the bank or meander into the bank or run into the bank or call the bank. And don't say things like, say something like, I don't have income, or I don't have business history, or anything of the like, because that is going to set off red flags. So instead, what you want to do is you want to focus or emphasize on the good things, and the good thing is your credit profile. The good thing is your consistency. The good thing is your professionalism. You basically walk in there, or when you call up, you control the conversation with the banker, okay? You're in control. I was just about to say the idiots, because they're not idiots. No one's an idiot here. Maybe people are just ignorant and don't have the right information. People are walking in and they're not doing the above things in which I've just mentioned, mentioning all the things of no-doc because they've seen a YouTube video, a TikTok video, etc., etc., and they're just messing up the whole program. We are much more prepared than that. We are much more astute than that, and we're going to do things properly. Let's get it. So let's get into loan amounts, terms, and banks that offer them. Now, let's make one thing clear. Most no-doc loans go up to around about $50,000, okay? Once you go over that threshold, or you're asking for more than that threshold, they're going to ask for full financials. So here and now, as of this video being made, okay, the most traditional banks out there don't openly advertise these no-doc loans. So you may be asking the question, where can you grab a hold of a no-doc loan? Don't worry, I got you. You want things like community banks, you want things like credit unions, okay? You want things like online lenders, fintech banks, okay, that offer more streamlined, minimal doc options. Let's get into some of them. So you need to look into platforms like Lendio. You need to look into Bluevine, Fundbox, or OnDeck. Now, they're known for their flexibility, they're known for their quick approvals, and they're known for really being partial or open to small business loans. So let's bring this all in, round it up, summarize it. Let's take it home. These are the steps that you need to take in order to get a no-doc loan in the US of A. Let's get it. Step one, you're going to need a clean personal credit profile. No late payments, no collections, no utilization, none of that stuff whatsoever. Step 2, you're going to need to separate your business from yourself. So what does that mean? No sole proprietorships. You're going to need an entity, LLC, C Corp, S Corp. That's how we're doing it. That's how we're getting it. Step 3, you're going to need to show activity, meaning bank statements. If you haven't got that much activity, don't worry. You're going to lean on your 680 plus credit score. Another way of doing it is building up money on your account. So basically putting deposits in over the course of 90 days. Now what that does prior to you going to that institution for the money, the moolah, the bling and the ka-ching, is it boosts your bank rating. Banks basically operate over 90-day periods and they monitor your account, the inflows and outflows each and every 90 days. Step 4, gather your bank statements. You're going to need that proof. You're going to need that consistency when you apply. Step 5, approach the bank or the lender strategically, not using language, vernacular, vocabulary like no doc. That's going to drop you in hot water. So what are you going to do? Basically, you're going to talk about their lending limits before any documentation. Step 6, you're going to start small. Aim for $50,000 or less. Now, once you've built that relationship and you're paying that money back on time, what's that going to do? That's going to qualify you for even bigger loans. Much easier. Bigger loans, more money to invest means more profits if you're using the money correctly.